Hello there. Welcome back to my channel. In this video, we want to look at the question paper of June 2025, and we are going to look at the question paper of preparation of the statement of profit or loss. So our question reads: You have been appointed as junior bookkeeper for Salon Blessing Beauty. Salon Blessing Beauty trade in a variety of beauty products, and the following information was supplied by them to you for the year ending 30 June 2024. So in terms of our required part, we are going to only look at 5.1 within the context of this video. So prepare the statement of profit or loss and other comprehensive income for the year ending 30 June 2024. So you'd see that our question has a total of 41 marks. So this is what we have. So we move on to our question whereby we are given the pre-adjustment trial balance on 30 June 2024, that is of Salon Blessing Beauty. So, of course, we have got the debit column, we've got the credit column. So, this is information that we have and that you just need to browse through before you start to answer the question. So, going through, you'd see that we also have the adjustments and additional information that we also need to read before you start to answer the question. And then we have got a continuation of additional information going down to additional information number 10. So this is the information that we have. So before you start to answer your question, you need to put down your financial year, where it's starting and where it's ending. For the case of the adjustments, remember, we might have adjustments that needs us to make proportionate calculations in terms of the number of months. So for you to be able to do that, you should have known your financial period. Remember, our financial period has got 12 months. So in this case, it is ending 30 June 2024. So we are saying 30 June 2024 is the financial year end. So it means it started at the previous year 12 months back. So we are saying 1 July 2023. So this is our financial year. So any calculation that needs proportionate calculations in terms of number of months, you refer back to your financial period. That is 1 July 2023 to 30 June 2024. So going to our answer section, you'll see that this is going to be our answer section. But we know that according to the layout of our statement of profit and loss, we are supposed to start with the sales figure or the revenue figure. So in this case, we are given, we can just try to see in terms of information that we have. We are having revenue, which is 400, revenue 478,943. So here we are saying we are starting with revenue. But of course, revenue, this figure that we have, we need to check if we have got any returns or data allowances. Remember, sales returns or data allowances. But we can quickly pick that we have got our sales returns that we have of 10,800, which needs to be subtracted from our revenue figure. So we subtract that one. Is it going to reduce our revenue figure? So we have 10,800. So we say in brackets, we start by putting the total amount that we have for revenue, which we are given as 478,943. Then we subtract the returns that we have just identified as 10,800. Then we check if we have got further adjustments or subtractions which needs to be done on the revenue. But if you go down, you see that we have also settlement discount granted 10,000. This is also supposed to reduce the figure for our revenue. So we come here, we reduce again 10,000. So with that, we move on to additional information to check if you've got any adjustment that is affecting revenue again. We try to go to see if we have got anything that is affecting our revenue. But if you go through, you'd see that we are not having any further adjustment affecting our revenue. So with that now, we can close our working and calculate it as 478,943 minus 10,800 minus 10,000, and then we get a net figure that we are supposed to get of 458,143. 458,143. So we can just maybe correct this part. So this is what we have. Then from revenue, we are supposed to move on to our cost of sales. So we are saying less cost of sales. So for cost of sales, we again try to see if we have got a figure for cost of sales that we are given in the question. We try to see if you go there, you'll see that we do not have a calculated figure according to our nominal account section of cost of sales. So in that case, if we don't have it, it means we have to calculate it using the formula cost of sales is equals to opening inventory. We add our purchases. If we've got purchase returns, we are supposed to subtract. And of course, any further adjustments in terms of if we check if we have got our settlement discount received, we have them. So it means we are supposed to subtract them. Settlement discount received, and then you are supposed to add your carriage on purchases, your customs duties if they are there, or import duties if they are there. Supposed to add them, then you subtract your closing inventory. So this is the formula that you are supposed to employ so that you can arrive at the cost of sales. So basically, this is what we have. So in this case, we are going to start with our open inventory. So open inventory will be given it in the list of our balances in the trial balance, whereby we're given inventory 1 January 2023, which is at the beginning of the period, which is now 13,708. So this is the one that we are going to start as our open inventory. So here, it means we are going to make our calculation of cost of sales beneath this, and we start with our opening. Opening inventory, which we identified as 13,708. And then from there, remember our formula, we said from opening inventory, we go to our purchases. So we look for our purchases. We see that we have given purchases. In this case, it is 106,420. So we are supposed to add our purchases. So we are saying purchases. But of course, our purchases also needs to be adjusted. Remember, we check if you've got some returns. We see that in terms of purchases returns, we'll check according to what we have. We see that we are not having purchase returns, but we are having settlement discount received 6,420, which is to be subtracted from our purchases 106,000. Our purchases is 106,420. So purchases in brackets, we have got 106,420. And then we subtract our settlement discount received 6,420. And then we check in terms of any additional information that is going to affect our purchases. We go to additional information 1, inventory of 2,165 rands bought was returned during this financial period. These goods were included in the inventory on hand as mentioned above, but no other entries were made. So these are purchase returns which are not recorded. So we need to subtract them from our purchase figure, 2,165. So we come here, we subtract 2,165. So with that, we can close and then we calculate to get the net figure. 106,420 minus 6,420 minus 2,165. Then obviously our answer is going to be 97,835. So this is what we have on this part. And then from there, we are supposed to check according to our formula. So according to our formula, we've already adjusted this part. So it means we are now going to our carriage on purchases. We check our carriage on purchases. We do have our carriage on purchases, 40,180. So we say carriage on purchases. So carriage on purchases, our figure is, we have 40,180. But of course, we don't have to put the figure as it is. You check additional information if you've got anything that is affecting our carriage on purchases in additional information. Of course, we do have to go additional information by additional information to check for that. So we go down. We are seeing that according to our adjustments, we are not seeing anything that is affecting our carriage on purchases. So with that, we can take the figure that we have in the pre-adjustment trial balance, which is carriage on purchases 40,180 as it is, and put it in our statement of profit and loss. We have 40,180. Then from there, according to our formula again, after carriage on purchases, we have got custom duties. We check custom duties. We see that we've got custom duties here, which is 11,400. So we come and include it here. So custom duty, we have a figure of 11,400. But of course, our 11,400, we need to check if you've got any additional information that is affecting our customs duties. But of course, we can clearly see that additional information number 2, raised custom duty of 600 rands, was still outstanding for May and June 2024. So if it's outstanding, we need to add it. Remember, according to the matching principle, we should record what belongs to this this current financial period in this current financial period. So in this case, our 600 as an owing, we need to edit the figure that we are given as customs duty, which is 11,400. So we can go and just show that calculation, whereby now here in brackets, we are now saying 11,400 and then we add the outstanding one, which is 600. And then we add that, we see that we are going to get it as 12,000. So this is what we have. And then if we check according to our formula, after adding custom duties, we are now supposed to subtract our closing inventory. So in that case, we go back to our answer section. It means we need to add there. We need to add to what we have. So we are now saying 13,708 plus 97,835 plus 40,180 plus 12,000. And you're supposed to get your answer is 163,723. So with that now, we can now subtract or say less our closing inventory. And so remember, our opening inventory, we got it in the pre-adjustment trial balance. And our closing, we should see it in the additional information. You see that additional information number 3 is saying inventory on hand at 30 June 2024. And we only take the inventory part, which is 103,723. $103,723. And we are saying less. And whenever we are saying less, we are subtracting. So you can show by putting brackets that we are subtracting. Then from there, we can close, whereby we are now calculating our cost of sales, and then we close also on top here. So now we are saying 163,723 minus 103,723. And then the answer that we are supposed to get, supposed to come here is our figure for cost of sales, which is supposed to be 60,000. 60,000. So 60,000 should come in the last column. So we should have our 60,000 on this part. And remember, we are saying less. And whenever I say less, we're subtracting. So we subtract. So here, we want to find our gross profit. We say our revenue minus cost of sales. So we are saying 458,143 minus 60,000. And then we get our figure is positive 398,143. So basically, that's what we have on that part. So with that, the figure that we got here is a positive figure. When it's a positive figure, it is our gross profit. So if you get a negative, it will be a gross loss. So in this case, we are saying gross profit. Okay, so this is what we have. So with that, from our gross profit, we are supposed to go to the other income section. So here we are saying other. So on other income section, we check the incomes that we have in the question. Of course, we go to the nominal account section and try to see what we have. So we go down checking for them. We have the first one, credit loss recovered. It's an income, 13,800. And remember, all incomes should be on the credit side and all expenses on the debit side. So for incomes, we have got credit loss recovered, 13,800. So we go and put that one. And of course, you don't have to put as it is. You need to check if there's we have got any additional information that is affecting our credit loss recovered. Maybe we have got a further credit loss recovered that is mentioned in the additional information. So here we are saying credit loss recovered. And then we check now the amount that we have is 13,800. But of course, we need to go to additional information to check if we've got a further credit loss recovered that is mentioned in the additional information. Go down, we see that we are not having anything about that. So we take the figure as it is, which we are given as 13,800. So we have 13. Then further on, we check what other income do we have. We have rent income, 24,000. So we come, we put our rent income. But of course, our figure that we are given as rent income is 24,000. But we need to check further information. What does it say about rent income? Item number 4. Rent has been received up to 31 December 2023. So we go back now. We see now the importance of knowing your financial period. This rent is to 31 December 2023. We go to our financial period. Our financial period started 1 July 2023 to 30 June 2024. And our rent is being said is up to 31 December 2023. So from this 1 July to 31 December, we count how many months we have with the whole of July, August, September, October, November, and December. So we have 1, 2, 3, 4, 5, 6. So this is 6 months. So the rent that has been received, saying rent has been received up to 31 December 2023. So the rent that has been received is only for 6 months. So we go back to our pre-adjustment trial balance. Remember, the figures that we are having in the pre-adjustment trial balance represent the actual figures. So rent income that we are seeing here represents the actual rent that was received. So this rent was only for 6 months, 24,000. So it means the other 6 months is not yet received, which is also supposed to be 24,000 again for the second half of the year. So we are saying we have got the outstanding rent income to be received. So basically, we are saying it's an accrued income, and we are supposed to add it. So the remaining 24,000, we add it to the 24,000 that has been received to get the total. So we come here, we make that adjustment whereby we are saying 24,000 plus 24,000. And then, of course, if you add, you're going to get your 48,000. Then we check again. We have any other income mentioned from rent income. We go down. We see that we do not have any income that we have. And of course, if you have exhausted all the incomes that are listed in the pre-adjustment trial balance, you need to check for provision or allowance for credit losses. You need to check for allowance for credit losses. So remember, this allowance for credit losses can either fall under other income or can fall under expenses, depending on the question that you are given in terms of the position of the allowance for credit losses. So remember, if it's an increase of allowance for credit losses, when we are comparing the current level of current level of allowance for credit losses and the previous year's allowance for credit losses, if you see that there's an increase, it is an expense. But if you see that there is a decrease, it is income. So you have to try to identify it before you leave the other income section, because if it might fall under the other income section. So we go and try to see what is additional information saying about that allowance. So we go down, we see that we are given it on item 9. Create an allowance for credit loss of 8% of trade and other receivables. And of course, we have trade and other receivables. We are given it as trade receivables control, which is 144,800. So we are saying 144,800 is the figure for trade receivables. But then we are calculating with 8%, which is 8 over 100. Then we multiply. But of course, we need to check if we have got anything that is further reducing the figure for trade receivables control. Remember, we might have further credit losses that were not captured or that were not recorded, that we need to first subtract, and then the net figure, then we calculate by the 8%. So if you go to additional information, we have got a number 5. An additional amount of 4,800 must be written off as irrecoverable. So this means, remember, anything that we see in the additional information means it's something that was not recorded. The fact that it's being mentioned in the additional information, the assumption is it wasn't captured, it wasn't recorded. So we need to first subtract 4,800. This is a credit loss because it was written off as irrecoverable, indicating it's a credit loss. So credit loss reduce the figure for trade receivables control. So we first subtract 4,800. So we are saying after identifying that, we put our brackets and we subtract the figure that we have just identified as 4,800. So with that, we can find the current level of provision for credit loss or the allowance for credit loss. So with that, I will try to calculate to see what we are getting. So you get 11,200. So this is at the current level of provision for credit loss. So we need to compare it with the previous year's allowance for credit loss, which will be given in the pre-adjustment trial balance. So if you check for allowance for credit loss, we see that we are not having it. It should be under the financial position account section, but it's not appearing, which means if it's not appearing, it means it is zero. So we have got a movement that we are seeing from 0 to 11,200. So in this case, it's an increase. And when it's an increase, according to our analysis, it should be an expense. So it doesn't qualify under other income section. So we leave it. We put it under expenses. So in that case, it means we have exhausted all the incomes that we have in the question. So we can now be able to add the two that we have. So we can close. So by adding, we are going to get a total of 61,800. So other income, the total for other income is 61,800, and we are supposed to add it to gross profit. So we are saying gross profit plus other income, and the answer that we get is the gross income for the year. So we add these two figures, and then the total that we are supposed to get is 459,943. And of course, we can underline on this part. So this is what we have basically. So the figure that we got here becomes our gross income for the year. So we are saying gross income for the year. So this is what we have. Then after that, we go to the less expenses section, whereby now we are saying less distribution administrative, and other expenses. And other expenses. And of course, we need to include all the expenses that we have in the question beneath that. So we refer back to our nominal account section. We go down looking for those expenses. So you can see that from the beginning of a nominal account section going down, the first that we can see is carriage on revenue, which is 43,020. But of course, we need to go to external information to check anything that is affecting our carriage on revenue. But you can see that we are not seeing anything affecting our revenue. So we take the figure as it is, 43,020, and put it here. So we have 43,000, 43,020. We go for the next one. We did adjust for this. We've got credit losses now. Credit loss is also an expense. So we have credit loss. Credit losses. The figure that we have for credit losses is 16,130. And of course, again, if additional information, we've got a further credit loss that we identified earlier, which is 4,800. We said it's a credit loss. So we've got a further credit loss, which we need to add 4,800. We add it to 16,130. So we come here. So in brackets, we are saying 16,130. And then we add our 4,800. So we add that, the figure that we are supposed to get is 20,930. Move again to see, according to our pre-adjustment trial balance, what we have next. So after credit loss, we do have packing materials. So packing materials, obviously, 12,000 indicates packing material that was bought. So the expense part that we need is packing material that was used. So how do we find it? We say what was bought minus what is remaining at the end of the period. So we go to the extra information to check if you have got packing material that is remaining at the end of the period, to subtract it from what was bought to get the used part. So we go back down. So we see that we've got packing material that is remaining inventory on the hand at 3rd June 2024. Packing material 2,277 indicates packing material remaining at the end of the period. So we subtract it from what was bought, which is 12,000, to get the one that was used. So we come here. We are saying packing material. So in brackets, what was bought is 12,000. Then we subtract what is remaining at the end of the period. 2,277. And then we try to calculate to see what are we supposed to get. So if we subtract, you are supposed to get 9,723. So that's what we have for packing material. We go to the next one. So after packing material, we've got salaries, which is 173,800. But of course, we need to check for adjustments for salaries. So we go back to check any additional information which is about salaries. We come to number 6. Number 6 says salaries were paid for 10 months only. On 1 May 2024, salaries were increased by 10%. So it means the salaries that we have in the pre-adjustment trial balance of 173,800 is for 10 months. And then we have got an increase which came after the 10 months. Remember, um, our year is ending end of June. So we're saying for May and June, it's not part of the salaries that we are having in the pre-adjustment trial balance. So we are saying we are going to divide the amount of salaries that we have by 10 to get the monthly salary before the increase. So because the increase was effected on 1 May. So we are saying the salaries figure that we have here is 173,800 divided by 10. You're going to get it as 17,380. So this is the monthly salary before the increase and before May. So what we are going to do now is we are going to multiply 17,380 by the increase that was effected in May, which is 10%. So of course, 10% will increase by 10%. 17,380 is supposed to increase by 10%. And you know that before the increase, it was 100%. Then increased by 10% to become 110%. Then we divide by 100, make it a decimal, it becomes 1.1. So we can multiply this 17,380 times 1.1. So we do that and see what we get. So if you multiply, you are going to get it as 19,118. So here it becomes 19,118. So this is the salaries per month after the increase. And the outstanding months that we are told is we have got 2 months that are outstanding. Remember, 10 months were paid. So it means the total 12 months that we have in the financial period minus 10 months that were paid, we get 2 months. So we've got outstanding of 2 months. So in that case, we say the monthly after the increase that we got times 2. So we are now saying 19,118. We multiply it by 2. And then we are supposed to get your answer as 38,236. 38,236. So basically, this is what we have. So this is the total salary that is outstanding, which we need to add to the salary that we are given, in the list of balances. Remember, we are given salaries as 173,800, and then we add 30,236. So for salaries, we come here in brackets, we are saying 173,800. We subtract, sorry, we add the one that is outstanding, which is 38,236. So we do that, we get the total of 212. 212,036. So basically that's what we have on salaries. And then from salaries, obviously, we move on to the next one. We have stationery, 5,912. And of course, stationery, this indicates stationery that was purchased, that was bought. So we need stationery that was used to regard it as an expense. But of course, if you go to additional information, you want to check if you've got stationery that was remaining at the end of the period. See that at the end of the period, we do not have stationery that was remaining. So it means all what was bought was used. So we take our 5,914 as an expense. So we come here. We now have stationery. At the stationery part, we have 5,914. Then we after stationery, we have sundry expenses as an expense. So we mention again our sundry expenses. So for sundry expenses, of course, we are given it as 86,220. But of course, we need to find out additional information if you've got anything affecting our sundry expenses. We come to number 7. It reads the sundry expense account includes an amount of 24,000 for the annual bonus which was paid up to September 2024. So this is an adjustment that we need to do. So this sundry expense has got an annual payment that was made for up to 30 September 2024. So we count the number of months that are outside our financial period. Remember, our financial period is ending. Our financial period is ending 30 June. So we are saying the months after June to September are outside of financial period. We have to remove them according to the matching principle. So we are saying end of June, we are saying July, August, September are out of the current financial period. So we've got 3 months out of 12. So we are saying 3 over 12 outside of financial period. Then we multiply by 24,000 to see the proportion that is supposed to be removed. So we calculate it like that. We can easily see that if you calculate it like that, it's going to give you 6,000. So this 6,000 is the one that doesn't belong to the current period, but it is inside the sundry expenses. So we need to remove it by subtracting it. So we're subtracting it from the figure for sundry expenses, which is 86,220. So in brackets, we are saying 86,220 minus 6,000. And then we get your answer as 80,220. So with that, after sundry expenses, we've got interest on loan. Interest on loan, obviously, we have to adjust it after. We adjust it after the net profit. So we can calculate it as a finance cost. So we're supposed to calculate it as a finance cost. So we're supposed to say, remember, we have got the allowance for credit loss that we that we did calculate, which is 11,200. We had calculated it under when we are still at the other income section, and we said it's an expense, it's an increase, so we're supposed to include it also. So we have got an allowance that we are supposed to put here is allowance for credit loss. Which is allowance for credit loss adjustment. And we got it as 11,200. So this is what we have on that part. And of course, we do also have depreciation, which we need to refer back and see how we can calculate it. Depreciation. So in terms of depreciation, we can refer back to the instruction of the question. So if you come to information number 8, it says non-current assets must be depreciated as follows. Equipment at 20% per annum according to the diminishing balance method. Diminishing balance method, which is the reducing balance method, is the one that we are supposed to use for equipment. And we see that we've got no further equipment that was purchased or that was bought during the period or disposed during the period. So we are simply going to calculate it using about 20%. So we have our figures here. So remember, the reducing balance method or diminishing balance method formula says percentage times carrying value. Where carrying value, we have to first calculate the carrying value by saying costs minus accumulated depreciation. So this is what we are going to do to first find the carrying value. So we check in terms of our equipment, what is the cost of the equipment? We are given it here, 157,800. So we are saying 157,800. We subtract accumulated depreciation for equipment, which we are given as 17,800. Then the answer that we are going to get here, you multiply by the percentage to get the depreciation. The percentage is 20%. The percentage is 20%, so we multiply it by 20%. So we calculate it like that, and we see, try to see what we get. So if you calculate it, you see that you get your answer is so you get your answer is 28,000. So depreciation of already we have the one that we calculated for equipment is 20,000. So in brackets we have 20,000. And of course we have to add the one for vehicles. So for vehicles, 15% annum according to the cost price method. But then we are being told that there was a second-hand vehicle, 40,000 rands, which was purchased on 31 December 2024. So it means this 40,000 that was purchased during the year is inside the vehicle's figure that we have 170,000. So we have to calculate it separately and remove it into inside the 170 so that we are left with vehicles that stayed for the whole year. So basically we are saying on our calculation, To calculate the vehicles that were there for the OA, we are saying 170,000 minus 40,000. Then we get what are the vehicles that were there for the OA. And then when you get the answer, we multiply it by the rate. Remember, it's on cost. The formula for cost price method is percentage times cost, of which these are the cost price that we are using. So we multiply by 15%. So we come in, we multiply it by 15%, 15%. So try to see what we get. So we try to calculate it as such. So basically, say 130,000 inside brackets. We are supposed to get 130,000 multiplied by 15%. So we get 19,500. Then we calculate the one for 40,000 that was introduced during the year. And it was introduced on 31 December. So it stayed from 1 January 2024 to 30 June at the end of the period, 2024. So in that case, it stayed for 6 months. So you're going to multiply by 6 over 12. So it's depreciation. If you say 15% of 40,000, you get the annual. Since it's per annum, then we reduce it to 6 months with the number of months that the non-current assets are stayed. So we are saying 15% times 40,000, 40,000 times 15% times 6 over 12. So we calculate as such, see that you're going to get your answer as 3,000. So this is what we have on this part. And then obviously, if you say 19,500 minus plus 3,000, we're going to get total depreciation for vehicles. So we add it like that, you get 22,500. So this is the total depreciation for vehicles, which we are supposed to add here, 22,500. So we add 22,500. What do we get? We get 50,500. So this is what we have on this part. And of course, we have to close. We have to close so that we can be able to find the total of the expenses. So we add everything that we have in the box to get the total expenses. So if you add, you're going to see that the total that you are supposed to get is 433,543. 433,543. So this is exactly what we have. And we subtract, remember we're saying less, so we're supposed to subtract. You say your gross income for the year minus your expenses. you arrive at your, you're supposed to arrive at your net profit. So on that part, we can also subtract our finance cost now. So we are now saying less finance costs. Remember, finance costs includes our interest on interest expense. So we are saying less finance cost. So for our finance costs, we are supposed to look for interest. So we go check in terms of our interest. Additional information, what does it say? Additional information number 10, provide for the outstanding interest on loan. The interest rate on the loan from ABC was increased by 2.75% on 1 January 2024. So it was increased for, so we are going to have two periods before the increase and after the increase. So before the increase, of course, we are saying it was up to end of December. And then after, it was from 1 January 2024 to 3rd June, of which is 6 months, 6 months in each period. So we check in terms of the percentages now, it was increased by 2.75, of which the one that we are given, the percentage that we are given here for interest loan, ABC Bank, 11% per annum. It means this is 11% was at the end of the year, that is at 30 June 2024. So it means that 2.75 was already added there. So we need to first subtract it to get the percentage before the increase. So before the increase, we subtract 11% minus 2.75 and see what we get. So if we calculate like that, you're going to get 8.25. So it means 8.25 was the percentage before the increase. So on our calculation now, we start with before the increase. We are going to use 8.25%. We multiply it by the total loan amount, which we are given as 240,000. And it was for 6 months. And then after the increase, it was now 11%. We multiply it by 240,000, and it was again for 6 months. So we calculate it like that. And we see what are we supposed to get there. So on the first part, 8.25% times 240,000 times 6 over 12, you're going to get it as 13,200. On the second part, 11% times 240,000 times 6 over 12, you get it as 9,900. So total interest, we added 13,200 plus 9,900, you get 23,100. So basically, this is what we have. So in terms of that now, we compare with the actual interest that was paid. So the actual interest that was paid, we get it in the nominal account section. So if you come here, interest at 24,800. So this is the actual that was paid. Then we compare it with what was supposed to be paid. So what was paid was 24,800, and what was supposed to be paid 20,100. So we paid more than. So the difference, we are supposed to subtract it from this one so that it goes to the one that is supposed to be for the period. So if you say 24,800 minus 23,100, what do we get? We are going to get 1,700. So this 1,700 is supposed to be subtracted from 24,800. In our answer section, we say now 24,800 in brackets minus 1,700. And then we arrive at 23,100. That is what is supposed to be for the period. And we are saying less, so we are subtracting. So we can show by putting our brackets. So after our finance course, obviously we need to do our calculation. So from there, we are supposed to get our net profit or loss for the year. So we are saying 459,943 minus 433,543 minus 23,100. And then we get a net figure of 3,300, which is now the net profit for the year. So that is what we have on that part. And then we are supposed to check for other comprehensive income for the year. Other comprehensive income for the year, which we don't have in the question, to arrive at total comprehensive income for the year. So we do that 3,300, and then we have nothing there, so it remains the same figure as 3,300. So this becomes our final figure. So basically, this is what we have, guys. According to the preparation of the statement of profit and loss, we have got a total of 41 marks. Thank you for listening, and hopefully the video was helpful. Please, let's not forget to subscribe and share. And let's share the link to our colleagues who are doing financial accounting info. Let's stay tuned for more videos to come. As for this video, I'm out.